Okay, so today went well, but yesterday did not go. Or when was it? I think it was yesterday. No, it was not. It was. Wait a second. Was it yesterday? Shit. I think it was yesterday I took a loss. I can just look at the chart and figure this out. Yesterday I took a loss because I broke my rule of trading news. I'm not good enough at this to be trading news, dude. So, fuck, was it? No, it wasn't yesterday, but yesterday I paper traded and I caught this move. On my paper trading account, this was my entry, and look at this. Dude, I bought the bottom. It was a good trade. Oh, I think this is it. Yeah, this is it. So look, I use the London high and low as liquidity levels to make decisions of like when to enter and when to exit the trade. So this is the London high, and I look for this retracement, like bounce downwards. So look, I saw this bar trying to go down is what it looked like, and then I entered on this one, and then we got this crazy candle right here. That stopped me out. I took a loss, dude, on this one. Like, this was not great. And then I took another small loss, but it wasn't the end of the world, but it's just like my rules didn't work and I traded news, which is super volatile, and I don't have the skills or the account size to be risking that kind of money. Like, this is a 1 minute candle, and that was almost a 10-point move. So that shit is not it. If it would have done this and retraced downwards, then that would have been a fucking solid trade right there. Anyways, so I took that loss, and then yesterday I was like, you know what, I'm just gonna practice. So again, we'll just mark out my liquidity levels that I use, which would be this. This is the London high. This is the London low, which is where I made my buy. So we waited for the confirmation bar, which is this green bar, and then I've entered here on this one, and then look at this. And that right there would have been my exit, but if I would have been patient and just waited throughout the day, which isn't that long. I mean, this is like a 30-minute move. That would have just been like $1,500 right there. But I paper traded, so it doesn't count, but it was a good decision, and it just proved that, like, it gave me some of my confidence back after taking that loss. Because I was able to be like, okay, word, well, yesterday I think we did have some news, like, nothing crazy though. Like, this stuff doesn't really it doesn't affect things in a way where you can make a ton of money or lose a ton of money in 2 minutes. So I took a trade. Today we didn't really have news like that, like we do later in the day, but I'm out. Like, this stuff doesn't matter like that. This is all before market open. So this is the only piece of news, this 8:30 crude oil inventories. That has nothing to do with what I'm doing, or the S&P really. So I didn't even pay attention to it. This stuff is gonna make the chart move. So I mean, I'll be at work, so I can't trade anyways. But even if I wasn't working, I would just stay off the charts for this. But we'll go to this morning. So went to the 30-minute chart to see where price was moving just in general. I'm going to delete these. Wait a second. Yeah. So it's kind of like bearish, a little choppy, but I was thinking, downward move, but my positions have been so quick. My entry and exit have been so quick that, I mean, it doesn't, my overall bias for the day hasn't mattered a ton. It would matter if I was holding for 20 to 30 minutes and catching those big moves that I just described from yesterday, but I'm not doing that yet because I'm too much of a pussy and I exit my positions too quick, just like I did today. I literally today, I wasn't even thinking, I just exited because I was in the green and I was like, get out, get out, get out. And that's not the way to do it, but we're working on it. Alright, London high, London low. This is a big move in the London market. That's like crazy. It's a crazy move. Asian high, Asian low. So this morning, normally I have a rule where I don't trade until 7:45, but I got rid of that rule because sometimes it's just too obvious to not take the trade. So today, dude, I'm just looking at the charts right here. Went to take a shit, came back. I saw this candle moving, and then I was like, okay, word, wicked right here, which is when the wick just kind of touches through, just pokes through the London high in this case. Could have been the Asian high, but it was the London high. So then I saw this bar moving down with like pretty quick momentum, so I entered, and then my risk would have been, that's like kind of a big stop loss, because my stop loss would have been a clearing bar above this London high. So a little sketchy, but the momentum kept on going. And then this is where I kind of panicked and I was like, fuck, like I'm up $325 right now, so just exit. So I exited for $325. My exit should have been this 200 EMA, which is this white line that's kind of running diagonally. That should have been my exit, so I'm going to try to get better at that. Really, my exit should have been the Asian low, but I'm trying to think how to explain it. Like, I would have, like, what I should have done was waited until it got to this 200 EMA, and then on this bar, I would be like, okay, we're reversing, and then exit there. But sometimes price will hang out around the 200 EMA and then continue downwards. A lot of people trade just off of this 200 EMA and the reversals off of this level. I don't do that because I don't know, it's not as reliable as these levels of liquidity, which is the Asian low and high and the London high and low. And then this is how prices moved for the rest of the morning. And then, like, this shit is just, it feels like easy. And I didn't take these trades, but this is why I use the London highs and lows and Asian highs and lows as price points to enter or exit. Really enter. Dude, it's like right here, for example. Or, sorry, it was this bar. I was like, okay, well, enter here. And that's easy money. Like, we're just going to bounce upwards at least a little bit up to here. Because price moves with where the liquidity is at. It's just like the natural state of being with the market. It's not like a set in stone thing, but it's just, that's the flow. So I would have entered here, let's say like 6,665.50. Almost would have stopped out, maybe would have stopped out, probably not. But then you would have made some money. You know what I'm saying? Like if you just would hang in there for a little bit, you could have made money on this candle. Even this same candle, you could have made money there. And then if you caught this move, then that's a dub, dude. Same with the, literally right here. So bounced, confirmation bar would be this green bar, enter on this bar, catch a solid move. I mean, that's like, it's like a 10-point move. right here, bounces downwards, right here, boom, confirmation bar, short it here, wait, almost get stopped out, not really even close to be honest, and then look, it moves with liquidity. So it's happening right now. Confirmation bar for downwards, for a downward move, boom, it's moving down. We're probably going to get to like right here, but I don't know. So made 325 today, took a loss the other day because I had traded news, and I'm never doing that again because that sucked. And then, so yeah, I think the past like 5 trades or the past 6 trades that I've taken, I've won 5. So I'm 5 for 6 is my batting average right now. So yeah, that's it, dude. Peace.